In this guide to navigating actions after losing a job, we're going to cover all aspects of COBRA. We're going to begin with COBRA defined, then talk about eligibility requirements, the election period and cost, the term, and then wrap up with some other options available to individuals. So let's begin with the definition. Well, COBRA is a law that was signed into place back in 1985 that allows individuals, employees, to temporarily continue their health insurance coverage after experiencing some type of qualifying event, such as a job loss, for example. So in order to continue your health insurance coverage that was through your prior employer, you must experience some type of qualifying event. In addition to this qualifying event, you also must have been a part of a qualified health plan and be considered a qualifying beneficiary. So what are some examples of a qualifying event as it relates to COBRA? Well, there's a number of ones that come to mind. First, of course, would be a layoff or furlough or a type of job loss that you experience, whether that be voluntary or involuntary. But it could also be if you have your hours reduced, or if there was a death or divorce within someone that's covered part of the health plan, or a loss of a child's coverage or retirement or becoming eligible for Medicare. So there's a number of examples of qualifying events out there as it relates to COBRA. You also need to be considered part of a qualifying group health plan, meaning your group health plan that you're a part of has greater than 20 employees. And if it has less than 20 employees, you may not be eligible for COBRA. And then finally, you need to be considered a qualified beneficiary. So you're a covered employee, a spouse, or a dependent under the health plan. So that's a little bit about the eligibility. Now, as far as the election period, you can elect COBRA 60 days from that date of the qualifying event or the date of the notice. So you have about a couple months to elect COBRA or elect a continuation of your health insurance coverage should you choose to do so. So you need to be cautious of this limited time frame to opt into COBRA. And then finally, it's also important to note that COBRA is generally more expensive for you compared to what you were previously paying when you were employed. And the reason for this is while you were an employee, your employer typically shared a portion of the cost, right? So they subsidize the portion of your health insurance plan. Once you're on COBRA, you're absorbing the entire cost. You're paying your employee portion plus the amount that was previously paid by your employer. So COBRA overall tends to be more expensive because you're paying now the employer plus the employee cost in one. And then as far as the term, COBRA, as I mentioned earlier, it's temporary continuation of health insurance coverage. So it generally lasts for up to 18 or 36 months, depending on the type of qualifying event that you have. So if you experienced a job loss, that would tend to be up to 18 months. You could qualify for COBRA coverage. But if you experience something more dramatic, like a divorce or death, then it could be up to 36 months. So it's important to understand that COBRA can provide temporary relief, but it doesn't last forever. There's going to come a point in time where you need to transition to another type of option as it relates to your health insurance coverage, and be cognizant of this timeline, assuming you don't get another job within 18 or 36 months, again, depending on this type of qualifying event that you have. So let's talk a little bit about some of the other options available for you. So first off, you have the option if you're married and you have a spouse that's working, then you could possibly jump to your spouse's health insurance plan, but that's not, of course, applicable to everyone. So what we commonly direct people towards is health insurance through a state-based exchange. And this was carried out through the Affordable Care Act. There's a bunch of states out there that offer state-administered and facilitated health insurance. In California, it's called Covered California, and these programs are subsidized. So the lower your income, the higher you could qualify for in federal subsidies and tax credits, meaning the lower your monthly premiums are. So it's important to know that the state health insurance is generally income-based. So while you're unemployed, your income's lower, then you could potentially have a lower amount on your health insurance premiums. So this always is a good option to look into potentially after COBRA coverage, or maybe even as a substitute to COBRA coverage. Keep an eye out for those, but it is administered at your state level, so you want to refer to your specific state's procedures. And then the final option for those with very low income sometimes is Medicaid, to be knowledgeable of. So that's a general overview of other options and COBRA in summary. Thanks, and hopefully this was helpful. Take care, and we'll talk with you next time.